Let's get straight into companies that have been stealing the spotlight. Kenya Power, one of them, mentioning on Friday that it has seen somewhat of a profit surge, first half profit rising 11% after we saw electricity sales increasing 7% and purchase costs falling. What did you make of those overall numbers? Because the market certainly anticipating them ahead of the release.
I think, you got quite a strong reaction Thursday and Friday as the market, as you said, anticipated strong results. And I think one of the stock brokerages put out a medium-term or long-term buy note. I think there are more exciting places to park your money for now. It's a value proposition, but the question is, when does the earnings accelerate? And I can't see a clear path towards earnings acceleration in the next 12 months. So therefore, I, for one, would look elsewhere right now as opposed to KPLC.
Of course, this is a time, Aly-Khan, where we've got this company investing very heavily in improving transmission lines. We've got that capital investment plan, as I was saying earlier, resulting in that interim dividend coming in lower this time around. What do you make of the kind of investments that are being made by the company in order to ramp up its production capacity down the line?
Well, it's very clear we have an enormous gap that they have to play catch up for a considerable period. And I think at least they've embarked on that process of catch up. But during this process of catch up, I think, there will be opportunities to pick up the stock at a good price further down the road. I think for now, with the dividend being a little bit light, and in a market where we're seeing some very healthy dividend payouts and some quite strong, robust, muscular earnings releases, I, for one, now see that in the comparison, I'm not that excited about it, but that's a personal opinion, obviously.
Of course, the company itself is very positive about the second half outlook moving into the year, but that second half performance is very much dependent on how fast we've got power producer Kenya Electricity Generating Company adding more power to the grid to feed the economy as well. So how does that relationship play itself out in your books?
Well, I think, for Kenya Power, they tend to make less money when they're using more thermal energy. So it's very much a weather play. And you've got to look at the meteorological outlook and see whether, the rains will be optimal. And if they are, then something like Kenya Power looks attractive to me in the shorter term. I'm not sure about the weather outlook. I'm a bit concerned of late that the hydrology levels are not what they were. And I need to see some kind of addition of power supply onto KPLC's grid, which is coming at a more attractive rate than the current strong reliance on thermal power, which is extremely expensive and crimps the P&L.
Whereabout is the company's pricing power sitting, though? Because it's highlighted that it's been able to pass on most of those extra costs incurred over to its customers, Aly-Khan.
It's a cost-through business. They will always pass it through. But our electricity bills, and I'm a consumer, have absolutely exploded. And I'm not sure that that the tolerance levels for these high prices is there. And I think the company has to be very wary of that pass-through and ensure that the consumer is actually getting a good value proposition. At the moment, it's very expensive. However, the bottom line story is all of us need power and all of us are willing to pay. KPLC has to just connect us to the grid and connect more and more people. In that sense, it's not a business that requires any rocket science. It just requires scaling up and doing it logically and quickly. And I think they've embarked on that process.
Well, one of the companies that's been affected by the high power prices is a company like Bamburi Cement. Nevertheless, it managed to put in quite impressive results. PAT up 10.5%. We've got that company trading at about a 9 PE right now. Solid enough results coming through, Aly-Khan, but the company has cited quite a few global and local issues that make earnings visibility moving forward a little bit questionable.
Yes, I thought that you're referring to the commentary, which was actually quite bearish. I mean, they cited a number of issues. They said America had improved, but how that impacts cement production in Kenya, I don't really know. But they were concerned about Europe, and closer to home, they cited the political uncertainty in the run-up to the general election. So it was a mixed bag in that commentary. I think they came out of this period relatively robustly. It's not as exciting as some people might have hoped for, but it's pretty on the market. And I think, as you said, on a P of 9, it doesn't look unattractive.
Doesn't look unattractive. Are you a buyer in Bamburi right now? Of course, we know that it has hived off the little stake that it did have in Ati River Mining. So let's go on to your rationale why you're not investing in Bamburi right now.
I haven't, I think the stock market will rally 25% from here through year end, but I think, if I'm going to put my money to work, it's not going to be in the likes of Bamburi Cement. I need a much more compelling argument, and I think there are plenty of compelling arguments to be had at the Nairobi Stock Exchange. I don't think Bamburi Cement is one of them. I don't think Kenya Power is one of them. I think something like Kenol Kobil is one of them, and their results are coming up during this week, and something like Kenya Commercial Bank. And in both these stocks, I expect rallies of about 40 to 50%. Things like Bamburi Cement and KPLC, I can't see myself getting more than 10 to 15%, and I'm requiring a lot of good execution, and I'm not sure that I'm going to get it.
Absolutely, especially in a context, Aly-Khan, where you've highlighted you see this market gaining further upward momentum moving forward. Results have been considerably better than consensus expectations so far, and that's managed to now, turn the NSE 20 in a positive direction. What's your outlook moving forward? And we've got to ask the question, was the bar set too low in the first place with regards to earnings expectations?
So starting with your final question, we tend to move from massive optimism to massive pessimism. So the Nairobi Securities Exchange is quite an interesting psychological study. And I think from the beginning of the year, we had become way too pessimistic. Interest rates were very high. All the local fund managers had a very weak stock market for a number of years, and they were simply parking their money in the bond market. So you can see the bond market has got a lot of excitement about it. But I think the pendulum had swung too far, and we're watching the pendulum swinging from a disequilibrium, from an egregious one into more of a fair value perception. And I think that's going to help at least 50% of the upside that I outlined beforehand. And I think also we're going to have a reducing interest rate environment. If the fund managers haven't extended duration at this point in time, they're surely going to have to flock back to the stock market, where, as you mentioned, something like BAT is paying you 10 to 11%, expanded earnings quite dramatically. And there are a number of instances I can see where you can actually chase stock. It requires a little bit of stock picking. It's not just, don't just look at it on a macro basis, top down, I need to get into the Nairobi Securities Exchange. You've got to pick your stocks very carefully. It's going to make a phenomenal difference in terms of performance.